I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CT Review. Today is May 19, Monday, 2025. Hope you had a good day, good weekend here. So I got to make videos quick, so I'll try to run through it. As you'll see that we gapped down. We had a big sell-off on Friday. We had pretty much the same bullish bias, some higher highs and higher lows, but then they sold it off hard. And then they gapped down, and then they rushed for making this speaker expanded. So I've been talking about this being a speaker since it was forming here with these lower lows and these higher highs. We never broke that high on Friday, and then they came down, opened up with the wick going into the previous body. No big deal, but and then you can see X marks the spot. You can see we have that daily imbalance. Now we're tagging the 50%. I'm waking up and it's already tagging the 50%. So these are literally the same levels. The only difference is that now we have this purple gap, which is the current week gap. So they rushed down, they came down some drives, and then they hit the 50%. I got it specifically right there. So in this case, and we're bullish, when we swept liquidity and we balanced more of this momentum here, then you could see us traveling back up with the 930 and then now sweeping that new high. So real simple, nothing complicating here. So don't get lost in this, but you'll see the gray gap here in the background, the gray. What's it called? I got it quadded right there. And then I have the pink bearish daily imbalance right here. This is quadded there, right there, right there, right there. You see that? Over here to the right, to the left, you see obviously the daily imbalance is quadded. And up here is that weekly bearish imbalance up there. As you see, we've already had these levels here. So, and then I got quadded. You can see right here, just the purple current week gap. So here, long story short, you see that we tagged there, and then algorithmically, take a look at us coming down. I'm just going to show the 15-minute real quick. Take a look at us coming down. We tagged that bottom daily imbalance. This is a bearish weekly. This is a bearish daily. We tag it. We come back up to the breakout level here, so to speak. Lower high, you can see it's 50% from that range to that range, a little bit higher. So general 61, maybe close to a fib retracement. We get the legs down. We come right back into that bearish daily. Look how we bounce on the top 25%, then to the top. 25%, then to the top. Then roll through after hitting the 50, we roll through to the bottom 25%. Look at that. Then we retrace back up to a breakout level, which is that low. And, they did a control of price here. These up candles, notice how the price is hitting it and it doesn't go any higher. So it's fanning out that way. It's just making a lower low. It's just making a lower low, or in this case, a higher low. But it's just making a leg down. And then you can see once we tap in here, we fall back down to where there's a body right there. The bodies are sitting right there. I know that 5 is sitting on there. Let me just move it over. So you see how the bodies are sitting right there on the bottom of the bearish daily imbalance, and then we pop back up into that. There's an imbalance right there, breakout level as well, and then 25% rushes down. Now for the bottom of the gray gap, more specifically that 50% of the daily bullish imbalance. And then watch how we come back up. Let me move this back over real quick. I got to make videos short, dude. So we come back in, and then you can see the 25% right there. We come hit the bottom of the gray. I'm talking about the gray gap now too. And then it's over here. See that? So then we pop up back to the 25% here, bottom of the bearish, playing around here, right? And you can see, sorry. You can see us popping. So right there, quadded levels here, and that's just a midnight level. So we're tagging the midnight level there, but we're coming to the 25%, coming back to the bottom and playing around here, and then we sweep these lows before 930. That shows that pretty much it pretty much outlines what the rest of the day is going to be like. We're in this inversion too, if I was to highlight it and drag it out. But see here, you can see the 916 and 14, 15, 16, 17. You can see that we sweep here And then we're sitting at that bottom. And look at the bodies there. Look at the bodies on the 15-minute. They're just sitting there. Look at the bodies on the 4-hour. The previous 4-hour, which is the 2 a.m. to 6 a.m. Closes, and the bodies are sitting on top. On the bottom of the bearish imbalance there. You can see that pretty much. And then the next one here, which is obviously the 6 o'clock 4-hour candle. And we're trying to catch a ride up, right? We even if you look at the hourly, you can see that the hourly was consolidating here a little bit. See this? See this little consolidation, and you get this 9 o'clock candle, which is the 1 hour, and it wicks it. It takes out that liquidity and rushes up. You're trying to catch this for the next push up, right? So that's just a model in itself. And then you can see here that as soon as we get above this candle, this 916 with the 917, we dip back in with the 918. We're using this inversion imbalance right here, which is going to be the 914 included with the gap. You can see we're digging in it a couple times, tagging it right there before 930. Now 930 is here. We're using the first imbalance at the 930 and not after, only because of the fact that if you toggle your regular trading hours, you'll see that we already are the 930 is opening below all that liquidity to the left. So as an example here, we also did that with Friday. And then you can see with the open right there, regular trading hours, see how it's below all these lows here that we just swept. We've already done damage here. So from now, and then from here, we have the opening range gap, obviously a big drop from the difference of the settlement of Friday. But it's the purpose of using this 930, because we always use after the 930. But if you are, the only time you are using the 930 as a first imbalance is when we have taken out liquidity to the bottom side, or in this case on Friday, you'll see that we, like Friday right here, you see this from Thursday to Friday's open. See how the 930 opened up above these highs right here, and then that's when you can use the first imbalance for 930. In that case, so in this case here, we just swept the lows and we opened down here, and we're using that as the first imbalance. So you can see that what's it called? You can see that it dips right back in, right? Dips in. We're at the 50% of the bearish pink daily imbalance, coupled with the top of the gray gap, that old gray gap, and X marks the spot. We dig in and we only tap the top 25% quadrant of the first imbalance. See, that doesn't even hit the 50. So yeah, it's a breakout level, but this is they dangled that and then they just took off. Just look at the delivery for the rest of the chart. You'll see that obviously that's at 50, blew through to 25. Now we got the opening range gap. Watch this. This is fire. Again, real quick, so you have the purple level, which is the current week gap. Then you have the low here. Watch the low of this weekly imbalance up here. I got it quadded. You can see it 1, 2, 3, 4. It's to the right. And then you'll see that the low is right there. See the low? Watch it. I'm dragging the low right there. What's this? What's that low? That's the low. This level is the low of the weekly imbalance. I'm going to transfer over here. It's right here. I'm showing it to you right there. But guess what's to the right of it? Oh, the 50% of the opening range gap today is literally the same level as that old weekly imbalance. This old weekly imbalance is from, February 24th. Okay. And then that level, which is right here. Okay. And it's literally at the same level of the opening range gap. So what do? We, so price left that first imbalance, pops up, bounce on top of that 25% opening range gap. I got that's quadded, right? Bounce up, come into here. And then we get another imbalance right there. We dip in. I got it all highlighted for you, so it should be easy. And then we get to the 25%. Now I'm in the purple. Purple, bottom 25% of the current week gap. We dip in to that last down candle, draw a line to it, and then we push up to 50%, past it. Now we're above the low of the weekly big pink imbalance, and now we're just dancing on it with that another imbalance right there, which is this 947. See that? You also have time involved here. then runs to more targets above, which is what? All this liquidity to the left. You also have, remember, the Friday's first imbalance and the PM session. You can see that we come and we tag into that nicely. We've got this little projection of these last 15-minute down candles right there. You can see that very clear. 2 to 2.5 is right there. The previous day's high is right there. And then the previous week's high would be obviously Thursday's high. So obviously, with the opening range gap being not sealed and we're bullish and you got a speaker going on, if you got a speaker here, you expect this to expand to the top side. If it was bearish, well, you would expect it for at least to come 50%. So from this high to this low, and buying up to here as a minimum would be nice, only for the fact that it's a mean reversion play. But if we're expanding and we're bullish, we're going to the top. Now they're selling off it. But the point is that yeah, that's the logic here. So if you're not tagging in here from this liquidity, I mean we re-rated this already. Now the top side would be obviously in play. If this is a momentum play, you can either put a stop here, and then get in that way, or momentum trading. I mean, when you see that, using these areas here, or you're waiting for this imbalance or the first imbalance to play in for you, or this algorithmic delivery right here. These are all entries as well. That's an entry. This is an entry. Let me keep going. And then when you get a birdie day, as I talk about all the time, you get these miniature pullbacks. So you're constantly buying until you're reaching the target to the left. But and then you see here, we came in, we're playing around at that 50. We're bouncing on the bottom. We tagged into this imbalance. Beautiful. If you had nothing on the chart, that would have been enough. We're at the 50. Look how this candle, 10:01. Look how the candle literally opens and shoots off at that 50 of our current week gap. Okay, we push up. We get to the 25% here. Now the top 25%. We're playing around. We come back into this the top 25% of our opening week gap. And there's an balance sitting right there. Almost 50% is nested. You can see how we tag it there. Then we tag it there. And then we fall short of tagging it there. All higher lows. Just taking out that guy. And you can see very nicely that that's nested together. Beautiful. Where does it go? Obviously, it goes up to, what's the next algorithmic delivery? Well, you have that top 25%. You see we're playing around. We bounce on it. Our bodies are sitting there. Just higher high and higher low. And then we finally get to the first 25% of where I took if you watch Thursday's video, or no, Friday's post in the community for YouTube, I showed my trade buying up to that 25%. This was moved over. So, yeah, this is how I make videos. I'm going to drag it out just a little bit, and then you can see I took that shit here. As you see, we're already playing around in that 25%. We're tagging and we're coming below it. Then we're coming back to it. So algorithmically, if we're bullish, again, let me go back to this. What's the next level from here of this top 25%? Well, of the opening range gap. Well, after that, it's this level. That level is the bottom 25% of that weekly bearish imbalance. And then what's above that? Well, we tag it right there. And then what's right there? Oh, the sealment of the literal opening range gap. Then we come up and then we get the PM session coming in, and we get a first imbalance for the PM session right there. And then beautiful sell here I took actually with you seeing it coming underneath that 133 candle. We're expecting to use this as an inversion. And then come down to wipe out some liquidity to the breakout level. What breakout level specifically? Look at that guy right there. See how we make a high here, and then we make another high, we come in. We make another high, we come in, and then we bust out. See how when we came down, look where we're referencing. We're referencing this area. Obviously, this is a minimal too if you're selling this, but this is the PM session trade, which was pretty nice. And what's it called? Just supporting here, and we're dancing around these areas here now. So does it come back into this 50? So from this range low to this range high, It looks like it's suspect. We did break through. Could be a mean reversion. We did make a speaker now on the top side. Coming back in at mean reversion would make sense, but we didn't get that in the PM session. So maybe it's just more bullish and it's going to lay on top of this and it's just going to break out, which is completely fine. And it wants to reach some of the targets up here that we've already been talking about. I don't know what they're going to do here with that, but it is bullish still, obviously. And then that's something you just don't want to fight. Again, I've explained all this. You can see the inversion here. Sorry, the colors are crazy. Because everything's like on top of each other. It's like driving me crazy, man. I don't want to delete shit so I don't fucking have to explain it and draw it or forget. But anyways, as you can see, what did they do? They brought it right back, smacked that first imbalance there. And we'll see what they do here. 15 minutes. I gotta be done. Dollar. So the thing is that dollar, I was assuming dollar was going to keep going up. Maybe we would have got a nice sell-off, but we're still bullish. Dollar's still bearish. And that's how we're flowing at the moment. But it's going to be interesting here to see what if dollar does kind of then push up. Maybe that will be our lower high. I doubt it though. Right now we're just going to count as being bullish. We don't need to be smarter than we need to be. Not helpful, not interesting at all here. But and what's it called? Dow just took out Trump's final drop. Finally. So they've accomplished that, and this is kind of like a resistance area. That's why I'm saying if we're like on the bearish side, and we really are, and they pull the rug from everybody, I mean it's easy for them to bring the price down and then buy it back up, even if we're bullish. It doesn't mean they can't do that. But continuing this high, I'm just gonna lean towards bullish. But I wonder if we're gonna end up being on even if you looked at what is this? 22 here for Dow. No, that's how I make videos long. When we get that break and that big push back up, this is like where we are right here. So does this keep going or does this fall out of bed and make another lower low? Which is pretty deep. I don't know. I don't think so. But maybe in this case where we came down and then we came all the way back up for resistance. But look how it came with a far leg down. But that's down. Then they pushed up for a new high and then they broke above and you've had higher lows ever since, and then you get this big push up, and then you get this break back down. But it being so deep, it's like we'll just treat it as a higher low. If you want to make these ranges big, bro, have fun, guys. Do it because we're gonna capitalize on it. And then so far this has been pushing up, so we'll see. But again, we're still bullish. I mean, there's nothing else I can really flow and say there, but this is starting to look real. The reason why I say it's like, I think this thing should fall. And it can still buy up, but I mean, these constant higher lows and this breakout area here and inefficiency, and I'd still would like for it to retrace back down and then buy up, whatever they do. And then S&P, there you go again. I mean, more proof of my point. It's like, I mean, you'd have to stop in its tracks real soon to be selling off, if we were bearish. So that's for sure. But this is literal bullish. Again, I would be. I mean, they already came to their breakout areas here, So if they start taking out these highs right here, see these slithering highs right here? If they take that out, it's like it's gone. But if it's has all right to come squeeze up here, stop, and then roll over. But I'm not gonna make this difficult, only for the fact that you brought the price right to 50%. I mean, I'm just gonna roll with it, And Nvidia, nice retrace there on Friday, and then we dipped down a little bit today, or from this current week so far, and then we pushed right back up. So that's a nice, I mean, for you to push back that up and then still close up here, that's bullish. I mean, because if you tagged into this bearish imbalance right here, and then let's just say the bodies were still here, and then we came down a little bit, like that would be more like inclining of, okay, this might be a lower high. You know what I'm saying? It could be, and then for him to come right back for a quick leg like this or something. Um, because this is, I don't know. I don't know. That's my opinion. But it's bullish. I mean, unless you get some crazy shit, manual intervention. But again, I mean, that's the purpose of the market, dude. Like we can't, like even on Friday, it's like we don't know if it's gonna gap down, where it's gonna go. That's manipulation. We have to account for that. So when I took my trade out, and I took it out literally right here on Friday, and I posted it, why did I do that? Well, because I'm not trying to mess around and find out. I mean, it can easily do this dumb shit, and this is perfect example of manual intervention. So okay, I got to be done. So in general speaking, I would just like to say that if this is if we're bullish, you're gonna just maybe do something like this, you know, and then get into that. All right. There's nothing really else to say unless that's bullish, unless it's just like straight up. It's straight up first. Let me do it this way. We go straight up first. We tag this. We have also that daily imbalance right there. I'm not highlighting it right now. I'm just highlighting the week. But right above that line is liquidity plus that imbalance. So as you can see, let's just say we did this and then, then we came back down. So that's the bullish examples. And then if we're bearish, then okay, it'd have to be we popped up, we rolled over, and we sank off, or we roll right through that motherfucker, right? That's it. There's really nothing else I can really look at here. And I think that was good, right? So I went over everything. I'm not missing anything. That was super fire, right? Hope you're not getting lost with all this. It's really simple. It really is with those levels. It's just now the purple is what's new. So don't get lost in this. But yeah, I think I've explained enough. Oh, also, what's nice is that the Asian range here you can see here, and then negative standard deviation 1 is here. About 50% of that is super close to it. And then we came back up to the top side and reaching almost maybe this top side, but pretty much a nice speaker. I mean, there's nothing else you could say here. And it is only Monday, so as you can see the daily wick, you can see how we dipped right into that first that bullish imbalance that I got highlighted right there. So in a really bullish scenario, and it's also bouncing on top of this February 25th up candle. So that nice support there, and this shows me it's bullish. You can see here. So, I think I'm just freezing up. All right, so you guys take care and God bless.